Thank you once again for attending and welcome to this educational presentation where today I'm going to reveal how to buy high and sell even higher, because most students learn the exact opposite when they're trading. We're always taught to buy low and sell high, or sell at a high price and then buy back at a lower level later on. Unfortunately, it's very difficult to do that because I've been trading roughly 43 years now, and I would say in my 43 years of trading, I would probably count on my hand how many times I've bought near the high and sold near, or I should say bought near the low and sold near the high. It's very difficult to do. I know of very few traders who are able to do that. What you really want to do is just get on board with a nice trend once it has been established, even if it's at a higher level than you originally wanted to enter, and then exit at a higher level. For example, let's see the way most traders trade as we look at this current chart in Boeing. Most traders would look at this and say, well, we kind of broke out here out of this kind of topping formation, and so we're obviously in an uptrend. But according to the indicators and the way I like to trade, and that chat room I like to go, they're telling me that this is really overbought now. In fact, we've gone up a little bit too much. And on top of that, that $5,000 course I took in candlestick trading says that that's a hanging man. That's a sell signal. So for all intents and purposes, I think we're going to top out a little bit here. So I'm going to sell, and hopefully I can buy back at a much lower level. So this is once again the premise of selling high, buying lower, or buying low and selling higher, the exact opposite. So you decide to sell, thinking that you're going to get in at the very top, and this happens, right? As I said, it's very difficult to pick these tops or bottoms because what we usually want to do is stand in the way of a trend. Well, with the strategy entry rules I'm going to be sharing with you today, you're going to get the actual rules for entry for this particular strategy. You would never have even considered selling. In fact, on that very same bar, this strategy would have generated a buy signal. So you could have taken advantage 3 days later of that nice up move that happened and potentially captured 80 points to the upside. So this is what we mean by buying high and selling higher. And you're going to see how simple it is to implement this way of trading on our platform. The PTS Primo charting platform, I developed this with Pro Trader Strategies that actually teaches you how to trade. So this is going to be a great educational presentation. Thanks for joining us on this Saturday morning. Once again, my name is Steven Primo. I am the president and founder of Specialist Trading. And I developed Specialist Trading and formulated it 12 years ago with only one goal in mind, and that was simply to educate traders around the world. That's why we're an educational company. We don't, profess to, have the perfect system or the perfect method that never fails. In fact, we don't believe in that concept. What we try to do is teach you high probability entry points and then help you design some type of method that makes you feel comfortable. Because ultimately, the only way one can become a consistent trader is by making your own trading decisions. So once again, if you come to Specialist Trading webinar today and you are thinking that I'm going to tell you what I think of the market, have we topped out or are we going back up, or what the perfect time frame is to trade, or some great picks I have for next week in stocks, you come to the wrong place, because that's not what we do. If I did that, once again, I would be taking you out of the game and telling you how to trade. This is our belief that the reason why most traders fail is because of that simple process. What you have to do is put yourself in the game and make your own trading decisions. For example, I traded the same way most traders trade some 43 years ago when I first started trading, and I used to do the same things, listen to news, all the earnings reports, all those things, fundamental news, economic reports, and nothing worked. And so I always say there's no reason why it should start working now. So once I started making my own decisions and not relying on these outside sources, that's when things started to turn around. So that's our goal at Specialist Trading, to really teach you how to trade. And you'll see the attention to detail we give in today's class as well. Now, before we begin, once again, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this strategy, the entry rules to the strategy that I'm actually going to give you today. But please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, we have a pretty good crowd here today. If you haven't done so already, I'm inviting each and every one of you to follow us on Twitter. There's our handle right there. I would suggest copying that down. Every day I post different information. Sometimes I post little bits of financial wisdom. Other times I actually share with you some of our signals that have been generated through our strategies. So lots of great free education. Please feel free, if you haven't done so already, to follow us on Twitter. Now remember, as I stated, if you've come here thinking today I'm going to tell you what the market's going to do on Monday, or if you come here thinking I'm going to tell you about a great stock pick I have for the next week, you come to the wrong place, because that, once again, in my opinion, is a recipe for disaster. Think of it, the entire industry is based on that premise, where you go to a website or a chat room, or watch some guy on TV, or follow some convoluted strategy or system, and it spits out what you should buy or what you should sell. And if that type of concept, that mindset works so well, then why do 85% of all traders fail? And when I say fail, I don't mean you're going to a series of losses. I mean literally fail. You give away all your money. It's because that really doesn't work. So I've been through it. Trust me, when I first started, I did the same things. And as I stated, these things are not about to start working today. So that's our goal as an educator. Not to force feed you signals, not to tell you how to trade or what to trade, but simply to teach you how to trade with the specialist edge. The specialist edge is rooted in simplicity, you'll see that today, and it allows you to make your own trading decisions. This is our goal as your educator. Now in today's class, please ask me as many questions as possible, but once again, we're a little bit different from other webinars, whereas we don't like to stop for every slide. We'll take far too much time of your Saturday morning, so if you have a question, kindly write it down, or just remember it, and I promise I'll get to it at the very end, okay? The only question we do answer at this time is the most common one, and that is, Steve, hey, is this being recorded? Yes, it is. A lot of our students have to leave early, or they may have technical issues on their computer or their internet connection. Don't worry, we will send each and every one of you a link to this recording once we've completed, okay? So once again, if you have a question, just wait till the end. All right, with that stated, let's begin today's educational presentation. What I want to talk to you about today is strategy 3A. This is a great strategy for capturing, especially in these volatile markets. We've all seen last week how the market all of a sudden fell out of bed. The volatility all of a sudden came right back into the market. This is a perfect strategy for to be trading if the market continues its volatility, okay? Doesn't matter if the market is going up or down, it really captures those big trends. Let me share with you some of the highlights. It's a continuation strategy. So what does a continuation strategy mean? Well, it means that you already look for an established trend. So we're not trying to pick a bottom. We're not trying to pick a top. It's okay. We're waiting for that trend to already have begun. And then once it pauses, then what we do is we wait for some structure to give us the green light to get in, and before it hopefully resumes its trending mode. Now, the way we do that is through a unique Bollinger Band setting. I'm going to share with you what this setting is today. Usually we reserve this for all the members of this course. We have members trading this course around the world, but I'm going to share with you what this setting is and the entry rules. Remember, it's designed to trade quick, powerful trends. It can be applied to any market, any time frame, and any direction. So even though the majority of examples I share with you today are with stocks, don't worry. I mean, I personally trade this on the E-mini futures. We have students that trade this on currency pairs. We have other students that apply this to commodities or currency pairs or Asian markets or the European markets or even Bitcoin. So it makes no difference. It just detects where a strong trend most likely is going to begin. Doesn't care what the market is, what time frame. But with all our methods, please learn the strategy. I'm going to give you the entry rules to this today, but please paper trade first. Most likely, if you jump in too quickly, the way most students do, it's been my experience, you'll lose money. And you'll say, hey, this doesn't work. I'm going to throw this away. Well, most of the time, it won't work because you're implementing the rules incorrectly. So please paper trade. Watch this video where I explain the entry process over and over again until you fully understand it. Now, our edge with all of our methods, with all of our strategies, with all of our techniques is consistency. Now, most people think consistency means, well, I guess that means that you have a lot of winners. That's not what consistency means. Consistency is an awareness that you will have losses from time to time. But a consistent method is able to recoup those losses rather quickly sometimes. So that's what you want in a method. You don't want to look at a method that promises the world that's going to have tons of home runs, that you make millions and millions of dollars, because those methods, in my experience, have been able also to lose all that money as well. And that's not a sound, fundamental way to trade. What you want to trade, the style is 2 steps forward, 1 step back. So you'll have a loss here and there every once in a while, but you'll be able to recoup it. That gives you the confidence to continue to trade. All right, so here's what we're going to be talking about today. The Bollinger Band setting and sharing with you how to apply it for entries. Now, if you're not familiar with Bollinger Bands, it's a very common tool, very common indicator put together by Mr. Bollinger some years ago. I mean, I believe over 50 years ago, or roughly around 50 years ago. Very common. We're going to use it in a different way. But firstly, I just want to share with you what the standard settings are. Okay? It's a Bollinger Bands have 3 lines or 3 bands. And what usually happens is that the first, or I should say the middle, is simply a moving average, and it's set to 20. It's a 20-period simple moving average. Now, here's the way it's usually set. You have an upper band above that moving average and a lower band. The deviation is usually set at 2. Now, don't ask me to go into the inner workings of what this means, of what upper band and lower band deviation means. It just basically is telling you the distance those will be from the middle moving average band. Now, it's usually set at 2. So once you apply that to any market, any time frame, it usually looks like this. And you'll see how they contract right here, usually before some big volatility. And then they'll contract again. The top band goes down, the bottom one goes up, and then you have some volatility to the downside and so forth. Okay? And they're used in a certain way when you have the standard setting. We're going to alter that setting. This is how we determine whether we're going to enter or not. Now, these are the proprietary settings. Firstly, once again, the standard setting, moving average, is set at 20. We're going to keep that the same, all right? We're going to keep it at 20. So if you go into your platform and you see that it has, the Bollinger Band middle moving average at 20, keep it there. All we're going to be changing are the upper and lower band deviation. In other words, the distance the upper and lower band are from the middle moving average. Now, before it was set at 2, a round number of 2. We're going to go down to fractions and set both the upper and lower down to fraction of 0.382. On some platforms, it may say negative 0.382 for the lower band because you're going below. And some, it may not. And some, it just may ask for the deviation. It's going to set them to both. Now, don't ask me why 0.382. Feel free to experiment with this if you want, but trust me, I've been experimenting with this for almost 4 decades now, and this works the best in terms of being able to apply it to any market and time frame and for getting the type of results we want, okay? 0.382. So as we look at the standard settings, once we apply our proprietary setting, look at how the Bollinger Bands have changed. We have more of this kind of fluid way of looking at them. This is what we're looking for, okay? Going back once again to the standard settings, you see how it's kind of jumbled and kind of fit and start and kind of more jagged. Once we apply the proprietary settings, it's a lot more smoother, like a nice river or a nice road that you can traverse on. All right, so once you have that down, let's share with you the entry rules. Now, one more thing I want to explain before that. A lot of you have platforms or are using, different trading vehicles with charts. You must apply this to the Bollinger Bands. If you don't have Bollinger Bands or you don't have the ability to edit it to these settings, ask your tech support for whatever platform you're using. They should be able to do that for you. If they can't, please do not substitute another indicator for this because you won't get the same type of results. I have a lot of students that have said, hey, Steve, can I use this with Keltner channels? Or can I use this with a moving average envelope? You're not going to get the same results because the settings just won't be the same, okay? So it must be on the Bollinger Bands and it must be at these settings. Now, here are the entry rules. I'm going to take them step by step. All right, step 1. Obviously, you want to plot the proprietary Bollinger Band setting on your chart. So once again, if we look at this, just older chart of Amazon for educational purposes only, we see here that we have a blank chart. On our platform, we've made it easy. All you have to do is click on the strategy in the upper green strategy tab, click it on, the drop-down menu appears, and click on indicator. It is already pre-formatted to those settings, so there's nothing you have to do. This takes less than a second to do, and you'll automatically have it there, okay? This is the proprietary Bollinger Band setting. Step 2. What we want to do is look for 5 consecutive price bars closing either on or above that highest Bollinger Band. Now we're looking for buy setups. So we want to see 5 consecutive, not 5 separate or distinct ones, but 5 in a row price bars closing on or above that highest Bollinger Band. So as we look here, we see, okay, we have 1, 2, 3, 4, 5, but then it went below. But right here we have 1, 2, 3, 4, 5, okay? 5 Bollinger Bands. So once we have identified that, we're going to buy when price trades one tick above bar 5. That's it, okay? So as we see here, this is bar number 5. So we'll place a little line here. You can do this yourself or just have some type of entry point. Now this is automatically done once again on our platform as well for you. You'll have a little line right there, okay? Now, we traded there on the very next bar, and look what happened. Okay, see, this is what we mean by continuation. Most traders would have said, well, wait a minute, we're way too high here. I can't buy this. Well, according to our proprietary rules here for entry, the market is telling us it still wants to go higher. It's got some room left in it. All right. Now, here's one caveat I want to share with you. As we go and look at this again, bar number 5, let's say let me just backtrack. Okay, so we're going to buy if it trades there. It doesn't have to close there. It has to trade there. Let's say it never trades there and starts heading back down. That's okay. We'll still buy once it trades above here. But let's say it closes below this top Bollinger Band. Well, that's our signal that most likely the trend has dissipated, and most likely this is not going to work out. So I would negate that setup and look for another one. So remember, if we trade above there, even if it takes 5 or 10 bars, as long as we don't close below that top Bollinger Band, we should be okay. Now, for sells, it's the exact same thing. We're just doing the opposite. Once again, we're going to plot our proprietary Bollinger Band setting. As we look at this chart here in Roku, we see that we've gone down much lower. Most people would say, I can't sell this. Look at it. It's already had a week's worth of sell-offs. But if we plot it, once again, strategy 3A in the drop-down menu, click on indicator, we see that we're below. So we don't want to buy if we're below that. Then we have our countdown, 5 consecutive price bars closing now on or below the lowest Bollinger Band, because now we're going to be selling. So we have 1, 2, 3, 4, 5. Now we're going to enter to sell when price trades one tick below bar 5. See, we're doing this exact same procedure where we just reversed it. So now here's bar number 5. And we're going to sell if it trades here. Now remember, if it doesn't trade there on the next bar and starts to go higher and higher and then closes above this top Bollinger Band, all bets are off. You should most likely negate the setup because the trend has dissipated. But even if we last 3 to 4 bars and never closed above there, we should be okay. So we went 1, 2, and then on the third bar, we entered. You see how we never closed above that lowest Bollinger Band. And Roku fell 45 points in the next couple of weeks. Not a bad little trade, right? Now look what happens after that. After that, the trend to the downside dried up and started to go back higher, all right? Now, if we had 5 more closes below, we could have had another setup to go short again. But what do we have here? 5 closes above. So what's the market telling us? Not some economic indicator, not the earnings, not some guy in a chat room. What is the market telling us? Telling us it wants to go higher. Most likely, this is just a little stop before the move continues to the upside. So now you'd switch and reverse. You'd buy if we trade here, which it did. Actually, it would have opened up here, and you could have quickly made 25 points. So you see how simple this is. We're not complicating our trading by looking at earnings reports, by looking at what the institutions are doing, by looking at Elliott Wave. It's very simple. The market tells you everything you need to know. All you have to do is learn how to listen to it. Now, I know a lot of you are saying, gosh, this is great. Where do I put my stop? Where do I exit? All right. That's all taught in our course. I'm giving you a little appetizer here. Remember I said I'm only going to be sharing the entry rules with you. But these examples here share with you that potentially you could have captured 45 points and potentially you could have captured 25 points. Now, some of our students like to take a profit of a couple of points, maybe 3 or 5 points, and they get out. That's fine. Other of our students like to stay in for as long as possible. That's fine. Remember, what did I say at the very opening of this presentation? We're an educational company where we provide you with the information so that you make the decision, not us. We're not going to tell you where to exit. That's your decision. We're not going to tell you where to place your stop, even though we give you upwards of 6 or 7 different stop placements. That's your decision. And we just shared with you one of the most basic entries. There are other entries as well, all supplied in our course. Remember, our goal is to give you this information that has high levels of consistency, but ultimately work with you, give you the different variables so that you decide. In my 43 years of trading, the only traders who have survived that same amount of time and who are consistently being successful in the market are the ones that make their own decisions. They don't go to chat rooms. They don't watch TV to find out what the guys are doing. They don't go to blogs and read what somebody thinks of the market. They make their own decisions because they have the confidence to pull the trigger in a consistent method. All right, so let's look at some more strategy 3A examples here. EA is above the Bollinger Band. We have a total of 5 bars. So here is our 5th bar. We're going to buy above here as long as we don't close below. And a quick 10 points you could have made in about 3 or 4 days. How about CSX, all right? Most traders would say, wait a minute, Steve, I can't sell here, and it looks like we're making a little bottom here. But here's bar number 5. What happened at that bottom? 20 points to the downside you could have taken advantage of. Costco, actually Costco's basically going sideways, but according to this procedure and according to these requirements, it's telling you it wants to go higher. All right, we have a total of 5 closes above. It's okay if it touches, just has to close above. Here's bar number 5. Could have entered on the very next bar, and in 3 days, potentially captured 17 points. Now, one of the main things students always ask is, they say, well, Steve, do I have to buy the stock because I like to trade options, or I like to I'm a spread trader? That's, once again, that's entirely up to you. These courses and these requirements are not formatted for you to trade any particular way. You can buy an odd lot, you can buy a call, you can buy a put if it's going down. It's up to you. We're just, once again, teaching you these high probability areas. How you decide to enter, once again, is up entirely to you. All right, looks like HAS is kind of going sideways, but if you know how to listen to the market, what do we have here? 1, 2, 3, 4, 5 closes below. So where most people would say, well, you know, not much really happening in this stock. Now that you learn how to listen to the market, you say, not really. The stock is telling me it may want to go lower. And people would say, well, how do you know that? Well, you've got 5 closes below. Now, if we trade below this, that's where you want to go short. So you had 2 days where nothing happened. So people would say, well, do I still wait for this? Well, it's up to you. Once again, it's still your choice. But as long as we haven't closed above this lowest Bollinger Band line here, you can still wait. It's up to you. Now, finally, you entered there. Now, here's a very important example. Do you notice how we traded there and then closed higher? This is where, once again, we ask you to paper trade, because most students would say, well, Steve, I don't understand there. Why would you enter? It has to close there, I thought. Doesn't have to close there. It only has to trade there. So this is why students lose a lot, or they don't have as much profits. They'll say to themselves, well, Steve, yeah, I got in, but it closed well below, like, say, for the example on here, here's where I got short. Well, actually, all it has to do is trade. Had you sold right here, potentially you could have captured 50 points, okay? Remember how I said this works really well in volatile markets? Do you remember in March how the market fell out of bed? Well, this is a perfect example. You could have taken advantage of this. This signal was generated in mid-February, well before the markets fell out of bed in March. Here's an example in Netflix. This is an older one in April. Kind of looks like the stock, once again, is doing nothing. Most traders would say, well, you know, I'm going to wait for those earnings to come out or wait for that economic report because Netflix really isn't doing anything. Well, that's because you're not listening to the market. You're listening to an outside source like economic news or maybe some Fibonacci retracement. What is the market telling you? It's telling you it has a total of 5 closes above the highest Bollinger Band. And it's telling you if it trades above here without closing below this one, it's most likely going to go up. So you could have entered on the very next bar and look at 80 potential points to the upside. So this is why students miss these things, because they're waiting for an economic report. They're waiting for the institutions to figure out what they're doing. They're waiting to see what some guy on TV says. Don't listen to those things. Take it from someone who used to listen to those 40 years ago. I almost, was not able to trade anymore on the floor because I couldn't make a dime listening to those things. My trading didn't start to become consistent once I let go of all that, what my mentors called useless noise. Here's another example in ROST. Once again, at the beginning of March, most traders would say, well, it looks like we're making a base here. I think I'm going to buy. If you apply the proprietary Bollinger Band setting, you would have seen you had 5 closes below. You could have entered and potentially captured 45 points in a couple of weeks. Remember, you don't have to short the stock. You could have easily bought puts, maybe some type of spread with a negative bias. It's up to you. We're not going to tell you how to trade. We just share with you these high probability entry points. Now, remember we opened up the presentation showing you the chart of Boeing, okay? This happened about a week or two ago. Most traders would have looked at that and said, well, we're overbought, and that candlestick course says that this is a really big selling opportunity. That's a hanging man, all right? So you would have decided to sell. According to this strategy, none of those things would have even been considered because that's outside noise. We don't listen to that stuff anymore. There's no consistency in that. The first thing you would do is apply the Bollinger Bands setting. On our platform, we make it simple. Remember, it's designed to teach you how to trade. In the drop-down menu, just click on the indicator, and right there, you would have seen that you had 5 closes above. Now, someone would say, but Steve, we had 5 closes below. 1, 2, 3, 4, 5. You're right. And this would have been a sell signal had we traded below bar number 5 here, but we never did. And then once we bounce back up, you switch gears and now look at this from a buyer's perspective. So as long as we trade above here, we don't have to close there. We just have to trade there. That's your buy setup. This was at the end of last month. Just a couple of weeks ago in May, as you can see on the very next bar, you could have entered. Now look what happened. We closed lower. That's okay. You don't have to close above. Potentially, you could have captured 80 points. Now remember, we give you upwards of 7 different exit methods. You could have exited with a quick 5-point gain. You could have exited with a maybe 20 or 30-point gain. You could have still been in this trade, according to what other method you want to trade. That is your decision. As we look at this chart in Amazon coming into April, once again, it looks like it's doing nothing. You could have entered 3 days later. Once again, we never closed below that Bollinger Band. You see, we touched it, but as long as we don't close below, it was still a good setup and potentially captured nearly 500 points in about 2 weeks. LRCX, once again, coming into March. Someone would say, well, Steve, wait a minute. This is a bullish engulfing pattern. All right. I was always taught in that, candlestick course that you have to buy there. And this is most likely making a bottom because the candlesticks are reversal patterns. So I'm going to buy this. Well, according to what the market is telling you, this is actually a sell setup as long as it trades below here. Now look what you had to do. You had to wait 1, 2, 3, 4, 5 days because it never traded there. But did we ever close above? No, we never did. So someone at this point would say, well, Steve, see, I was right. Well, yeah, you were right for about 3 days maybe, but what if you still held on? You'd be losing right now, and you could have missed entirely a 90-point drop. So this is why we say it is far more important to listen to the market than to listen to an outside source. Now let's look at some other markets, some other time frames, because we don't want you to think that it only can be applied to stocks. Once again, I use this on E-mini futures. For example, here's a 1-hour chart of the E-mini futures, 5 closes above. This is where we're going to be buying. It traded there on the next hourly bar, 12 points to the upside, roughly about $600 per contract. Someone would say, but gosh, how can I buy up here? Well, you don't have to. Remember, that's your choice. We're not telling you that this is a system, that the only way to get good results is that you have to take every setup. You don't have to. This is not a system. We don't backtest or have stats on any of our methods because we want everyone to trade them differently. Remember, you're going to have 7 ways to enter, exit, and place your stop. That's a total of 21 different variables. All right? You put all those together, that's like hundreds, if not thousands of ways to trade this. We can't have statistics on each and every one, but we encourage all of our students to trade differently according to their own means. That was an hourly chart. Here's another one, an hourly chart. Once again, 5 closes below. That's where we're going to be entering to go short. You could have entered on the very next bar. Total of 40 points that you potentially could have captured. Once again, I know a lot of you are probably going to be saying, well, Steve, where do I place the stop? Where do I get out? That's all taught in our course. Here's an example in the New Zealand British pound on a 4-hour chart. Doesn't look like much is happening, but we have 5 bars closing above. This just barely closed above. Remember, it has to close above. It's okay if it touches it. As long as it closes above, that's fine. That's your entry point on the currency pair. 50 pips, a quick 50 pips on this 4-hour chart, okay? Now, that's a small little gain there you could have made. What about a big one? Here's the Canadian dollar. 5 closes below. Here's where someone said, well, Steve, this is a morning star. This is where you want to buy, right? Not really. It's a sell setup. you would have entered and potentially captured 642 pips in the next month. Okay, what happened to the candlestick pattern? Didn't work very well, right? But you could have potentially captured upwards of over $6,000 per unit trading this. So let's recap before you can ask me any questions you like. Remember, this is a continuation method. As you saw, what we're doing is waiting for a trend to start. A little pause takes place, and that's where we get in on the continuation of the trend. The way we do that is by using the unique Bollinger Bands setting, which I shared with you today. Remember, that's usually just reserved for the students around the world who have purchased this method. I shared with you what those settings are. It's designed to trade quick, powerful, trendy moves, as you just saw. And you can apply it to any market, any time frame, and any direction. I shared with you intraday trading of the E-mini futures, currency pairs. You can trade it on Bitcoin, commodities, and stocks as well. You can trade it going up, trade it going down. But remember, if you're going to be trading this, paper trade first. Most likely you will lose money. In fact, I can almost guarantee you will lose money because you didn't study the procedure well enough. You didn't realize what the requirements were. Maybe you didn't have the proper settings on the Bollinger Band. Maybe you didn't have 5 count bars either above or below. So you have to really paper trade first. Our edge at Specialist Trading is consistency. All right. What we're trying to do is instill that mindset in you, knowing that you will have losses from time to time. That's okay. As long as you're able to recoup those losses, that's what you should be striving for. Now, ask yourself, before you ask me any questions, do you think this strategy could have helped your trading this past year? What if we go into a really volatile market, the way we've seen in the last couple of days? Do you think it could help you in this upcoming volatile market? I think your answer would be yes. So we have a great special offer for all of you attending today and taking time out of your Saturday. We're going to offer you Strategy 3A. Now, pay no attention to the E-mini title there, because when we first started promoting this, it was mainly used for intraday trading of the futures, because that's where I like to use it. But we had students who started using it on stocks and futures and currency pairs as well. So we didn't change the title there, but it can be applied to all markets. We're going to throw in the Strategy 3A course, but we're also going to give you another course. We're going to throw in an entirely different method. This is strategy number 1. I've talked about this before in the past. It's based on entirely different rules, entirely different setup, and has an entirely different concept behind it. Because before, we were looking to buy high and sell higher. Well, this does the opposite. It's looking to buy low in an overall uptrend or sell high in an overall downtrend. For example, let's look at this older chart of the spiders. Most traders would see this and say, well, Steve, we're in a downtrend. Look, we broke that support. We're making lower lows, so I don't want to buy this, and if I'm going to do anything, I'll sell it. But here's what strategy number 1 did. Strategy number 1 actually generated a signal, because according to its proprietary setting and its rules, it actually said we were in an overall uptrend, and this was a perfect place to buy. And as you can see, the spiders went up 8 points in the next week. I know 8 points doesn't seem like a lot, but that transferred over onto nearly 700 Dow Jones points. So we're going to throw in strategy number 1, all the rules, all the entry points. You're going to know exactly all the rules to this course. But on top of that, we're also adding some extra bonuses, upwards of 7 different Saturday morning bonuses. We're going to give you the add-ons if you happen to have Metastock, MT4, Sierra Charts, NinjaTrader, or even TradeStation. We will give you the add-on, in other words, that generates the up and down arrows. You also get my full Secrets of a Stock Specialist course. This is a 3-hour video seminar. You also get a PDF version of my book where I go into detail on what it was like to trade during the crash of 1987. Also, I'm going to skip strategy number, or I should say bonus number 4 right there, and go on to bonus number 5. It's our Secrets 2.0 course where we take it up to more advanced edges, more advanced techniques. Bonus number 6 is our scanner that comes on our charts to identify strategy setups, and bonus number 7 is our multi-scanner. You can scan for multiple strategy setups on a nightly basis. Here's what I wanted to talk about, though. Bonus number 4, 6 months of our platform. I think this is the most valuable bonus we're giving you today, because here's what's applied with that. Because remember, we developed this platform to teach traders how to trade, to make everything extremely simple. Obviously, you're getting strategies 3A and number 1. We're also going to throw in the Strength of Trend tool. This is a great tool I developed with Pro Trader Strategies that has an uncanny ability to determine if a trend is running out of steam or not. You're going to get the signal scanners we talked about, our enhanced buy-sell line, which tells you the overall trend It's a great way to determine 4 different ways what the overall trend is. Our top bottom 25% tool, which actually determines the short-term trend. You get auto-generated exit levels. One click of your mouse and you can see where one method for exiting would appear. And this all comes with personalized tech support. We created this to make trading simple, but also to teach you. It's the educational platform that you've been searching for. Remember, you're getting 6 months of this thrown in along with all these extra bonuses. So let's break this down, okay? Premier Bollinger Band strategy number 3A, consistent pullback method, strategy number 1, all the indicator settings pre-formatted, complete strategy course rules, includes all entries, all exits, all stops, and 6 months of the platform free. Now remember, this all comes with educational correspondence in the form of my personal email address. You can contact me whenever you'd like with any questions. Now normally, this would cost over $7,200, all right? We're in no way going to charge you that on this Saturday special. We're going to drop it down to only $297. That's close to nearly $7,000 saving for all this information. It's taken me roughly 4 decades to accumulate. You're going to have it for less than $300. But this discount is for a limited time only. Remember, you're getting 6 months of the platform, 2 strategies, and all those extra bonuses applied with our platform that are included on our platform. We always say, a year from today, you will have wished to become a member of this course, of these courses, I should say, more than 1 course, actually, total of 2 plus the platform. So take advantage of this great opportunity. Remember, less than $300, you most likely either lost in the market or spent that in commission costs alone. So in order to become a student of mine and to take advantage of this great discount, contact Pro Trader Strategies. I developed the platform with them. They're in charge of all the discounting and of all the tech support. You can email them at trading@protraderstrategies.com, but I would really suggest giving them a call. They have qualified trading consultants manning the phones right now. They would be more than happy to answer any of your questions. Give them a call at 310-598-6677. They can answer any question. There's absolutely no obligation. They would be more than happy to make you feel comfortable, give you some type of information regarding the platform, tech support, or if you're just interested in using the add-ons, okay? Now that link you see at the very bottom will take you to the sign-up page. It will also give you more information about this. It's not a live link, so we've posted a live link in the chat box. All you have to do is go to the chat box in the far right-hand corner of the Go to Webinar column and click that on. It will take you right there to the sign-up page. Okay, we have a few moments left for any questions. If you do have some, just go to your question and answer box on the far right-hand corner, type them in, and I will be more than happy to answer them. Okay, someone's asking, can we trade this on TradeStation or MetaStock? Yes, you can. Like I said, you can have the add-ons. They will automatically generate the up and down arrows for these signals as educational tools. But really, the beauty of this is that, many times if you have another platform like MetaStock or TradeStation or MT4 or even NinjaTrader, it'll take you a couple of minutes sometime to search for the indicator, to go in there and maybe to generate the tab, to have it come on your charts. And it'll take a minute or so to do that. With our platform, we designed it really simply so that it takes less than a second or two to have it all appear on your chart. So that's why I would suggest focusing more on the 6 months of the platform. Now, once again, it's your choice, but the platform, we've had rave reviews and testimonials from students around the world who say how simple it is to apply. Question, when you say 1 tick above, how much is that? Okay, good question. Well, it depends on what market you're trading. For example, if you're trading stocks, stocks move in increments of 1 penny or 1 cent. So in other words, let's say the high of bar 5 is at 50, okay? So 1 tick above that would be 50.01, all right? Let's say the low is at 45. 1 tick below that would be at 44.99, all right? It's 1 decimal point. Now, if you're trading currency pairs, it's 1 pip, all right? That's 1 tick. They call it a pip. If you're trading futures, it's 1 tick as well, but depending on the futures, sometimes a tick is 25 cents. You have to know what you're trading. But a tick is just a unit of measurement, okay? It's 1 increment. I hope that makes sense. Now, this is up to you. That's the standard format. If you want to wait for 3 ticks, for 5 ticks, some students even wait for 20 ticks. That's entirely up to you. but the standard format is to 1. Remember, you're in charge, not us. We're just highlighting a high probability area, okay? Lastly, someone said, maybe you came in later, didn't see that, can we trade this intraday? Yes, you can. I showed you an hourly chart and a 4-hour chart of the currency pairs, an hourly chart of the futures. But trust me, I've used this on tick charts of the E-mini futures. So yes, wherever there is a trend, it will pick this up. All right. So if you want to use it on a 5-minute time frame, that's fine. You want to use it on a tick chart or a weekly bar, you know, it can also be applied to a monthly bar. It makes no difference what time frame or what direction. Okay. Any more questions while you have me here? Remember, if you happen to have a question once we've concluded, you can still contact Pro Trader Strategies. They will answer any questions you have. There's absolutely no obligation. You're not going to be required to buy anything. They would be more than happy. But remember, this limited time discount of $297 lasts for a small amount of time. So don't sleep on this. You'll all get a recording of this presentation so you can watch this over and over again. And most likely it will convince you that it's really worth its weight for $297. But if you decide to call up 2 weeks later, most likely it may go up to near over $7,000 again. So you don't want to waste, you know, this great discount of $297 by taking your time to decide. Okay. Okay, if there are no further questions, I just want to conclude now by sharing with you one last look at our disclaimer. And I just want to say thank you so much. Remember, we're a little bit different from other presentations in that we try to teach you with each one of our free webinars so that you can see our sincerity to really educating traders. Now, most traders or most webinars will share with you what their product is and say, in order to figure out how to do it, you have to spend $5,000 or $10,000. Well, we're different from that. We want to actually teach you, whether you decide to become a student of mine or not, something, and we know with with use of it, you'll see that, wow, this stuff really works, and you'll come back and become a student of ours. So I want to say thank you so much for attending. I hope you learned something, but most especially, I wish and hope that you become students of mine in this strategy number 3A course. Thank you so much. I'll see you next Saturday. Bye-bye.